Hello, and welcome to March's edition for the Arizona real estate market update. And what a springtime it's been. You know, we've had just a ton of snow and a ton of wet stuff here. And it's been a relatively cool spring, but I imagine that within the next week or two, we'll see some increasing temperatures, let's call it that. So let's look at the real estate market in the greater Phoenix, central Arizona area. And like I mentioned last month, we're back in a seller's market. We're tracking about 2002, 2016 sort of pace, certainly not 2021 and 2022. And I get a lot of questions, why aren't prices coming down? And we're going to look at some headlines that are really terrifying headlines. I think everybody expects prices to come down, but like I mentioned last October, November timeframe, I think that's where the bottom in the market has been, and we've been increasing ever since then. Even though we've had a pullback, owners with 2 years of ownership still close with significant profits. But for the next 3 to 5 months, at least year-over-year appreciation rates will be negative because we had that huge peak towards the latter part of last year. And then, of course, they've pulled back a little bit for several reasons, and we'll talk about that in this video. The leading metrics in Greater Phoenix do not support a continued downward pressure on prices. As a matter of fact, they're starting to come up, as I mentioned just a minute ago. So let's get right into the first slide, and I want to look at some of these crazy headlines that some people are maybe seeing on the internet. And I cut some of these out just because I think not only are they terrifying, they are manufactured to be terrifying. You got things like terrifying outcome, the lost decade, horrifying scenario, crash of 2023, the next meltdown, and most of these are across the United States, but. I think what you have to understand the numbers behind these. And quite frankly, I think most of these are made up to shock and catch eyeballs, because look at some of these views, like 1 million views on this one over here, 800,000, probably 1 million by now. This one, the horrifying scenario one, 356,000 views. And the reason these are there is because they want to capture eyeballs, because that's how they get paid. So I understand that, but you need to understand the numbers that go behind these sorts of headlines that just don't make a lot of sense. Let's look at a few more here, and then we'll get right into some charts that, quite frankly, debunk almost all of these. It's all unraveling. The big short, rate hell is coming. Yes, interest rates have gone up. Who knows how far they're going to go up? But one of the reasons that we don't have a big supply of houses on the market is because they've gone up. And we'll talk about that a little bit. So let's take a look at one of the first charts that I want you to look at. These cat pictures of these two women over here just crack me up. If anybody knows where these movie things, or it looks like a movie anyway, come from, please let me know. They just crack me up. So the top right is YouTubers crash already. We're crashing like we saw in the prior slide. And here's this calm looking cat here, Phoenix real estate prices. And let's take a look at what they've done, right? We hit the top back in May of last year. Many people think the top was like late summer, early fall, but I can prove to you that the top was around May of last year. And since then, we've had a pullback of about 11% to the lows in late December, which 11% on a price doubling over the last 3 or 4 years, in my mind, is not a bad deal. So remember what I just said, that back over here, for the next 3 to 5 months, year-over-year appreciation rates are going to be negative, right? And that only makes sense. If you bought in this time period, you've got a pullback. So if you're bought here and now selling here, you've got a pullback. That's the way it is. But is your house price still effective for you versus rent? I think that's the question that you should be asking yourself. And then, of course, towards the end of the year, and I spoke about this a number of times, in October, November, we started to see an increase in prices. Now, the reason this chart doesn't go up is this, because these are sales, right? These are not offers and activity that go before the sale, which is a closing. So this chart is about 2 or 3 months behind the price increase. This is the documented price, right? And we looked at charts that were showing prices were increasing in October, November. Since then, they've come up almost 3%. We're getting towards the end of March, so these numbers are a little bit stale. And we'll go through some charts here that show we've had a normal run up in prices that you would expect in the springtime, even though interest rates have been going up. Goldman Sachs predicts Phoenix housing market could crash to 2008 levels. I don't think that's in the works. We don't have near the market we had in 2008. And we'll talk a little bit about this in these next couple of slides. So here's where the rubber hits the road. And this guy cracks me up. I mean, this guy is from Venture Consulting. 292,000 views he had on this headline: Phoenix housing crash getting bad. And his claim is the 200% surge in homes for sale. Now, let's poke a little bit about this headline, because this sounds awful, right? This sounds like the world is coming apart. So let me explain how this works. So let's look at this chart over here. This red line is 2002 active listings on the market. And we hit a high, you know, sort of the latter part of the year in 2021 of 19,640 homes. Now, that was the high of the year. The low of the year was in March of this many, about 5,000 or so homes. Now, this line here is today's number, right? 13670, if I remember that number. So yes, you can look at this number today and say, yes, we've had a year over year, you know, I don't know how your position is. Yes, it's higher by double what it was last year, but last year was extremely thin for people looking to sell houses. So yes, that's the headline, but where are we in regards to the normal pullback? And the normal pullback is up here. So you can see the actual listing, the supply on the market has been coming down since March. This line follows this line. So this is a little bit misleading if you don't know where you're getting the numbers from, okay? This slide on the right is listings under contract. In March of last year, we were at the almost 12,000 level. This year, we're at 8,500. So we're down 24%. Hey, guess what? There aren't as many homes on the market. Of course, we're going to be down 24%, but prices are not falling as most people are led to believe by these sorts of headlines. So be careful what headlines you watch. And this guy's going to be hanging around for a few more slides here, because quite frankly, I think this is, if it wasn't so humorous, I don't know what to call it. But anyway, so let's take a look at another piece of evidence that debunks this headline. This is the active listing counts, and this goes back to 2018, beginning of 2019. And you can see that the listings have just been falling off. And in April of last year, we had this big increase up to the high that we just spoke about of 19,640. And since then, we've come down about 30%. So there's one way you could get the 200% surge in homes for sale. But to me, the headline is misleading, because that sort of would focus on this sort of a curve, and that is what's not is certainly not what's happening in the market. So Mr. Venture Consulting can take his numbers and create all sorts of headlines, but I think they're misleading. The bottom line is, if you're paying rent on a decent size apartment or a house, the chances are fairly good that you can get into a home with a low down payment, especially if you're a first-time home buyer, for about the same amount of rent, and then you can be paying your mortgage off and benefiting from the equity growth instead of paying your landlord's mortgage off. So let's take another little chunk of data here off the armless listings in Arizona. So this arrow here points to where we are as far as listings on the market in the early March timeframe. You can see that, like I've mentioned before, they're right around 15,000, plus or minus a couple hundred. Here's where we were in the dilemma year. So I put all the years on here. So this chart might look a little bit mixed up, but the real bad years that people are saying, hey, we're going to come back to that, are these prices up in here. And you can see quite clearly that we're nowhere near those levels. So we're down here. Houses on the market are decreasing at a slow rate. And I really think what's happening here is, as I talk to most people who want to move, is, they've got these very small mortgages, 2 or 3% interest rate. And to move with interest rates, 6 or 7%, and I'll show you the interest rate chart here in a few charts, it's painful. So people are holding their homes off the market, but people are buying. The demand is going up, which is causing the prices to be supported somewhat. And we'll take a look at those numbers a little bit. So remember those headlines. So down here, I put a little note: 4th lowest count in over 18 years, right? So you count these years that we were higher, and we're very low on inventory. So it's tough to buy a house. If you're looking, you can find them. If you're selling, you can get your price in most areas of the county, and we'll talk about that chart also here in a few charts. So this is another thing that people wring their hands over, is the foreclosure rate. Now, this was the bad years. Remember these foreclosure rates here? I mean, you know, the local attorneys who do foreclosures for the beneficiaries. We're a trustee state here in Arizona, so it's very easy to foreclose on a house and sell it. They must have staffed up to, I don't know how much staff to handle these sorts of foreclosures. Those were the bad years, and they've just come down slowly. And look where we are today. This is February 2023. We had 34 foreclosures in the month of February. 34. Now, I don't know what caused those foreclosures. Who knows? Maybe people got tired of paying their mortgage. I really don't know. That to me is such a low number, it even barely needs mentioning. So foreclosures, with the amount of equity that people have in their homes, even with interest rates high as they are, it's almost possible to go into a foreclosure and not make money, or not put your house on the market and make money if you don't want to pay the mortgage. Certainly do not stop paying your mortgage because you get tired of making the payment. Sell your property, don't wait for it to foreclose. So there's where we are, foreclosures. I talk about these just about every month. I don't see foreclosures becoming a dilemma until at least you get to like the 500 or 1,000 rate. You know, there's 3.5 million people almost that live in the Phoenix metro area, and 34 foreclosures is just a minuscule number. So let's take a look at this mortgage chart right now. This is what all the buyers are interested in. And you can go and get this chart. I look at this just about every day, mortgagenewsdaily.com. They'll give you your rates. And of course, depending on who you're working with, you'll get different quotes for different prices and different stuff like that. I understand that. But what has happened since over the last year or two is rates have really shot up. It's very unusual to have this sort of increase in like, what is it, 24 days or something like that. Not as high as they were October, November of last year. So they've drifted down a little bit. And as a matter of fact, even though Powell put up the federal interest rates a quarter point this week, you have to remember that mortgage interest rates generally are based on inflation rates, not the Federal Reserve rate. So they pulled back a little bit. As a matter of fact, when he increased that the federal rate this week, these dropped down below 5%. They dropped a quarter of a point when he increased the federal rates a quarter of a point. So mortgage rates dropped a little bit. The federal increase rates tends to drive up the cost of getting a loan, which is how many points you pay, origination fees and stuff like that. If you want more information on how that works, contact me, or I can refer you to many lenders who can explain it in much more excruciating detail than I can. But this is what rates are looking like. Historically, these are not high. You know, they have interest rates off the bottom of the screen here at 2 or 3% is just unrealistic for the long term. So when I bought my first house, I think I paid somewhere between 7.5% and 8%. But you know what? What was key for me is what I could get into a house, my first house, for what I was paying for rent. So it just made sense. You know, I paid down my own mortgage and benefit from the increase in price over the years, which really helped me when I was much younger. So that's a little bit about mortgage rates. Let's talk about the Cromford Market Index. Before we get to the summary Cromford Market Index, let's look at the towns typically in the Phoenix metropolitan area. And you can see, quite frankly, that I would say 2/3 of these towns here, maybe even a little bit more, are seller markets, as I've put over here. So Chandler is just on fire. That's got a Cromford Market Index of 200. And they sort of go down from there down to Paradise Valley at 122. Now, Paradise Valley, if you know the area, it's very expensive up there. Not a lot of homes turnover, so it's very, one home, especially a very expensive home, can move these numbers significantly. But Chandler, Fountain Hills, Glendale, Phoenix, all these are sort of in the city, sort of in the metropolitan area towns. Where are you going to find the best deals? Is in Maricopa, which is about 30 minutes south of Phoenix area, and Buckeye, which is west of Phoenix. These are These are great markets if you want to deal, but as usual, they're a little bit further out. And that's why, right? They're not as in high demand as these cities that are close, let's say just closer to the airport. That's the way I like to characterize it. So if you want to get detailed information on your city or your neighborhood, don't hesitate to give me a shout, and I will tell you what's going on in your neck of the woods and with your property. So let's take a look at the overall Cromford Market Index. Now this sort of coalesces all these towns into one market index, so you can look at this as the Central Arizona Phoenix Metro market status, right? So the way this works is each one of these dials represents this chart below it. You can see the supply index has fallen, and I spoke a little bit about that. I think many people who want to move just are sitting on these 2 or 3% mortgages, and they said, you know what, I'm just going to stay where I am. I'm going to put some money into painting or fixing my pool or what have you, and I'm just going to stay right here. And really can't blame them for that. They've got a good mortgage at a good rate, and unless you've got to move for a different place, then why bother? So our supply is coming down, and at the same time our demand is going up. Now it's flattened out over here for the last couple of weeks. That could be again for interest rates or people just not being able to find the house they want, but people are looking and people are buying. So that's gone up by 4.3 points. So the demand is a little bit in the red. And you combine these two and come up with an overall market index for the Phoenix area, and the market index trend has gone up 10 points over the last 30 days. Now this needle tends to show what's happening with prices, with 100 being normalized around the current inflation rate. So prices are going up faster than the inflation rate, demand's increasing, supply is coming down. And if you are familiar with Economics 101, you know that that is a recipe for increasing prices. So one of these days, this Federal Reserve is going to not only lower interest rates, but the inflation rate is probably going to ease somewhat. And I think you're going to see another frenzy for buying homes. So if you're looking to get into a home, your first home, or looking to invest in the Arizona area, if you're bringing cash in, then certainly you're in a better position. So that's the Cromford Market Index. We'll see. We'll watch that see what happens next month. So here's a summary of where we are. Greater Phoenix is back in the seller market, tracking 2015, 2016. There's really only 3 buyers markets left: Buckeye, Maricopa, and Queen Creek, and those are the further out environs. Beautiful places, but a little bit further out. The newest listings are lowest in over 23 years. So we are not seeing properties getting dumped on the market. You have to remember that in the 2008-2009 crash, what happened there was that a lot of people had bought homes just on speculation, and they had no intent on living in them. So we had an oversupply of overbuilt homes that people were getting foreclosed on. So be aware of that. The numbers do not support a giant crash. Cash buyers have pulled back a little bit, but FHA has done some manipulations in their conventional loan limits. You can get some great first-time home buyer loans there. They've reduced the mortgage interest premiums, which has the effect of maybe taking $200 or $300 off a loan payment for first-time home buyers. So FHA used to be a little bit challenging in that department, but they are really sort of taking the lead on for first-time home buyers. So if you're currently renting, looking for a place, you need to start looking now. Okay, don't wait until you see prices going up. You'll miss the market, I can promise you. So why are prices not declining? You know, we talked about a little bit. Active listings are going down, and demand is going up. That can only support prices. We're still about 10 years behind the build curve to provide single-family homes for everybody who wants one. So, you know, that's going to take a big impetus to get these builders to start building more homes. I don't see it. They haven't started. They're putting up apartments and things like that. So, so that's a little bit about what's going on here. So, owners with 2+ years of ownership. So if you bought since the COVID period, you've got a good profit. You've got about 18% if you bought 2 years ago, 60% if you bought 4 years ago. And if you bought 6 years ago, then you have probably an equity of about 86%. Significant profits. I misused the term equity there, but your property is going to be worth significantly more than when you bought it, even if you bought 6 years ago. So that's a huge thing. So the top headlines here: inflation measures increase. So my analysis on when interest rates might drop has to be further out to May, June, if the inflation measures don't decline earlier. So we're going to have to watch those. I originally thought that would take place earlier in the spring or late spring, but inflation is still with us, as everybody probably knows. If you've filled gas up recently, don't even want to talk about it. So the bottom headline here: leading metrics in Greater Phoenix do not support continued downward pressure on price to the same degree as the last half of 2022. You can go back and look at my videos of that time period and see that I was telling you that in October, November of last year. So that's it. That's sort of where we are on the Arizona real estate market. If you want more information, there's also free online sources that you can get from me. You can get my book on how to sell homes fast for top dollar. There's a free download there. You can get all sorts of online resources. You can subscribe to this YouTube channel at this link, and you can subscribe to my newsletter at this link. As always, you can contact me at Geoff@jeffgreenrealtor.com, and call me if you have any questions at all at 602-790-2927. I hope you have a great day and great rest of the month. We'll talk to you next month. Thanks. Have a great day. Bye-bye.